welcome. You're watching Money, Money, Money. I'm Samira Abdi. Now, if you've seen a broker's computer, you'll know how busy and alive that screen really is, right? And why is that? Because equity, or shares as we call it, are being bought and sold. So once you buy these shares, then long-term investors will perhaps be holding on to them for years and years. Very minutely, you follow the stock movement to see if you've made losses or gains, but that should not be the extent of your interest. Did you know that as a minority shareholder, you also have certain rights over the company whose shares you own? So joining in today to explain the nuances of the rights of small shareholders, we have Mr. J. N. Gupta, who's the former Executive Director of SEBI and currently the Managing Director at Shareholders Empowerment Services. Also with us is Firoz Aziz of Anand Rathi Private Wealth Management, who also has his pulse on many retail investors. And with us also today are two of our viewers. So we have Ankita Parekh and Mayank Karya, who join in to ask perhaps a lot of questions. You guys are shareholders, right?
Yes.
Okay. So thanks very much to all of you for joining in. First up, Mr. Gupta, my question is to you. So we have two shareholders, Mayank and Ankita. You know, perhaps many people like them say that I have 5 shares, 2 shares, 10 shares of a company. Is it really necessary for me to be involved in the functioning of a company? I mean, what difference can perhaps me with my 2 shares make?
See, it's a very old saying that each drop makes ocean. So every shareholder, whether he or she holds 1 share or 5 share or 10 share or 100 shares, they together constitute the shareholder community. And if everybody starts thinking that what I am going to do or how I am going to affect, nothing will happen. And in the same case with Indian democracy, where till 12 years or 15 years back, very few people voted because they thought that they are not going to make any change. And you are seeing the change in Indian democracy, where participation has increased to 60-70%. Similarly, for the shareholders, it is not necessary that they have invested and they are waiting like a passive investor to get their returns or get cheated or something like this. It is like this. It is a property. The way you guard your property, your house, your car or something, you have to guard your investment in the shares. And the method of guarding the share is this: you should know what the company is doing, whether the company is following the law or not, how the company is being managed, and you should participate in affairs of the company the manner in which the law provides for it. And law provides lot of things for the shareholders, because ultimately the shareholders, whether you are 1 share or million share, you are the owner of the company. So they should never forget that they are the real owners of the company.
Yeah, that's true. However small it may be, like you said, you know, every drop matters. But you know, how has life really changed for the minority shareholder? What exactly are their rights, and how has the New Companies Act helped them?
As I said, that you are as a owner of a company, so you have all the rights of ownership. But since the company is conglomeration of so many millions of thousands of shareholders, now if every shareholder says that I will do this and I will do that, the company cannot function. So that's where there is a differentiation, that you are a shareholder, then there is a board, then there is a management. So shareholders do not have any right to participate in day-to-day activity or in the micromanagement of the company. But the law provides that they have got full authority for the constitution of the board of directors and giving them powers. And law also provides that certain matters have to be necessarily brought to the attention of shareholder, approval of shareholders. So that way the law distinguish that what can be done by the management of the board and under whose direction, whose authority. Again, shareholder supreme. But the major change that has happened from the Companies Act is the e-voting. Earlier, the shareholders, although they had right, but there was no opportunity for them to exercise the right. Like if you were living in Mumbai and the company was to hold its annual general meeting in Raipur or Bhagalpur or some other place. Now, if with 1 share or 5 shares, you got to travel to Bhagalpur, take leave from your office, spend 1,000, 10,000 rupees, and whereas the worth of your shares is only 500 rupees. So that was the impediment. Now with this e-voting that has come in, this impediment has gone. However, the knowledge gap remains, as you are aware that in Indian scenario, the knowledge gap is very big as far as the investors are concerned. And most of the investors, as we normally call, that they invest in the chal. Somebody tells them that there is a chal in the share, so they also join the bandwagon. But the person who advised them ki chal hai, he gets out, makes his money, but the investor gets stuck. So knowledge gap is the biggest issue in Indian.
Firoz, I want to ask you, Mr. Gupta has raised a very important point about this knowledge gap. But, you know, I may be having shares of companies across various sectors. Every sector has its own nuances, its own way of functioning, and perhaps I may not be best equipped to know, you know, whether their way of conducting business is the best or the most optimum way of conducting business. Are people coming to you, I mean, do people come to you with queries like this, asking that, you know, you recommended me to buy ABC company, now how do I exercise my rights there?
See, what happens is, of course, it's a very diverse group of stocks, because you have 5,000, 6,000 listed stocks, and you might be holding stocks which might not be covered by large broking houses also. So it's very critical to understand what is the key parameter on which you evaluate all companies in general. There are some parameters which are to be taken into account irrespective of what sector stock are you buying. The more important bit is you need to see whether you're paying the right amount of price for that stock, right? Which is depicted by a small little variable which is very easily available on public domain. It's called the price to earning multiple. So you need to make sure that you're buying at the right price, because there will be so many stocks which are not priced right. So that's your first step of buying it. After you have ownership, then you need to make sure that you're checking the transactions and the annual reports on a yearly basis, right? Then you will be able to definitely take support from firms like Mr. Gupta's firm, which actually provides knowledge to people to exercise their right in the right fashion. And that comes the third step of taking the right decision. So first is buy the right thing at the right prices. It's common across all sectors. And then go ahead and make sure that once you've bought it, you are trying to read up on it. You have annual reports which come, the quarterly results gets announced. You see something which are transactions which are not the right ones. You try and do homework, and then rely on firms like Mr. Gupta's firms to get recommendation on what should you vote for and what you should vote against in the e-voting category, which has been recently introduced.
What happens, you know, of late we've seen a lot of QIPs, preferential issues, etc. coming in. So what happens when the equity gets diluted? I mean, what kind of an impact is it there for the small shareholders?
See, the law provides that any further share issue has to be given to the existing shareholder in the same proportion as they hold the equity, so that if there is a cake and I own 1% of the cake, I should not get less than 1% at any point of time, unless the shareholders themselves agree. But in India, what is happening, most of the companies are not giving opportunity to the existing investor to share the prosperity. They are either going for the preferential share route or QIP or QIB, whatever you may call. So as a result, the investors get diluted. The law's intent to protect is not working out, because the resolution is passed where the promoters themselves vote or people interested party vote. So I have already written to SEBI on the issue. I said that companies should make more and more right issues rather than preferential. And I have given the data, because everybody said the primary market is dead. It's not dead. The amount that is raised through the primary market in the last 5 years has almost remained static. The only thing is that IPO and rights issue have become less, whereas QIP and preferential offer have become more. So more than 90% money is raised through QIP and preferential offer, which benefit the promoters and other related parties.
Yeah, that's true. That's a fair point. In fact, we need to take a quick break on that note, but we'll come back in a bit. We'll discuss lots more. We'll also tell you what to look out for in your shareholder agreement, how to exercise your rights. All of that is lined up after a very quick break. Do stay tuned to Money, Money, Money.